this better. I think this should be good right here. This is a funny twist. Is this better? Let me know in the chat if this is better. I don't know what you guys are hearing on your end. Let me listen here. Oh yeah, I hear that. That is absolutely not what it's supposed to sound like. So, is it better now? Why? Why do you do this to me? This is not good. Let me know if it's good. Sound is good. Okay, better. Thank you. Thank you very much, Gia. Not sure what was going on there. A little odd on the sound end, but little refresh of the mic. There we go. Perfect. Guys, let's go ahead and jump in. Let's take a look at what we're looking at in the macroeconomic side, and let's talk about this. So first off, let's go ahead and drop this off here. Bam, there we go. Guys, we're going to be talking today about the macroeconomic news here. We're going to be getting into that. We're going to talk about these new Fed rates because we got new numbers that just came in. Going to be taking a look at these right here, the liquidations, crypto bubbles. We're going to dive into there. And then I got some articles about the economy. Shout out to millennials. They are actually rocking it right now, and they're on track to do something great. I will get that fixed in a second. Jamie Dimon, I should say, from JP Morgan, talking about two extraordinary clouds that are threatening the United States in the investor world. Then I've got my X marks the spot headlines, and then we're going to jump into these charts right here because these charts, this is going to be pretty big. What's going on right now? Hitting some key levels, but could we see rejection at 28,300? We're going to jump into those charts and we will see how it all goes. So let's go ahead and jump into my news screens here and let's talk about this, guys. Economic calendar today. We are looking here at initial jobless claims just coming in this morning, about an hour ago. So yeah, I appreciate that. Thanks, Ninja Glock. Gia with my blue wrench in there, Crux of Crypto with my blue wrench in there. No matter how good they are, they cannot control the sound on my end. So, hey, Crypto Billy, man, shout out to you, brother. I need another link from Sin City Crypto because they had to reschedule me. So if you can talk to your guys over there, that'd be great, Billy. Um, Initial jobless claims, guys, September 30th. This is for September that just closed out a few days ago, last right before we hit the weekend there. We did previously have 205,000 initial jobless claims for last week. And what that means is 205,000 people had filed new unemployment requests, claims. So consensus was 210,000. Forecast was 210,000. We actually only came in at 207,000. So that means, guess what? We saw a little pump in the markets today. Um, that is a big deal, and that's why we're seeing that movement right there. But tomorrow, that's going to be the ones that I'm watching. That non-farm payrolls, previously at $187,000. Now it's consensus is 170, which would be lower, and forecast is 150, which would be much lower. So we're going to see what this payrolls comes in at and see if they're actually letting more people go or if they're just hiring with less and offsetting those job numbers. And then unemployment rate, previously at 3.8%. That's what it currently is at right now. The consensus on that is that it will be lower at 3.7 and forecast at 3.8. Guys, this is important. This is important for a couple of reasons. One, nobody wants to see unemployment, right? We don't want people to lose their jobs. It takes money to pay bills and have a quality of life. Well, yes, you can say that if people are losing their jobs, that means that demand is going to go down and it's going to fix inflation. That's the Federal Reserve's approach. But from the humanity approach, you got to have humanity. There is a little bit of a there is a little bit there of a reason for the numbers to stay high, and that would be to come down, and that would be because it's going to help the economy grow, but the humanity piece of it has got to touch base there. And sorry, I just had Crypto Keeper trying to call me during my live stream, so Crypto Keeper not knowing that I'm live right now. I'm gonna have to fix that for him. So we got to have a humanity approach to this on unemployment. We want people to have jobs, and there has to be a good balance here. But there is a possibility we could see a recession go on, and those numbers start to fix because that's kind of what fixes the inflation situation that we have, and it may not affect the jobs. So we're gonna get into that article also. Um, that is what I have for you. Oh, guess what? Guess what he's hitting me up for, guys? He just hit me up to ask me if I wanted to jump in on the big trade competition that Ben Armstrong and all of them are in. So that's interesting. Um, So yeah, we're going to be looking at that tomorrow. This information here is going to be the make or break for if we are in actually a new rally again, or is this just a correction that will pull back down. So we'll know all of that tomorrow morning. So we're going to be watching that closely. Let's go ahead and jump over to the CME. Let's give it a little refreshy fresh here. I know it's crazy, Mr. J. 79.6% chance that on November 1st we are going to be right here where we're staying at. That's going to be a continuation pause on the markets there for the Fed interest rates, and then 20% chance that we will see a increase, a hike. And so I don't know that that's going to happen. We'll have to wait and see. Right now, though, looking like we are going to have another pause. Let's go to December 13th and see how we're looking there. December 13th, getting a little bit higher likelihood here of a rate hike in December. And I do think if the numbers go out and they're not favorable for the Federal Reserve, that they might actually go for this rate hike. So we're going to have to watch that closely. Liquidations last 24 hours, guys. Let's jump in here. Last 24 hours of liquidations. 14,459 traders were liquidated for a total of the liquidations coming in at $41.1 million. So that is substantial, guys. Uh, Bitcoin coming in here, a lot of shorts liquidation. So people were trying to short, and it did not happen for them. Looking at about $7.4 million in short liquidations there. Ethereum, though, long liquidations because people thought it was going to move with it, and it didn't happen. Otter, shout out to you, brother. I'm sorry I cannot catch your time slot that you're in because I'm prepping on my show, but we need to coordinate, man. We get with me. We need to coordinate. Hit me up on Twitter, DM me, and we'll talk today. um, yeah, a pause in the rates would be bad because I think that's going to give the opportunity for inflation to put a sticky finger back on stuff again. So, especially heading into the wintertime with energy cost and all that. So, we know that the energy cost is a big expense for people in the household, and it would not be good at all. You're right. Crypto bubbles. Looking at the daily here, TWT, one of our big earners, 14.6% on that token. Hex, which I think I saw somewhere that Hex was down 99.4% from its high. It's something like that. I read that the other day. Don't quote me on that, but it's ugly. Um, what else we got? Ton AVAX. AVAX is up 3.9%. I was talking about AVAX yesterday. Chainlink still up 1.8%. So that's good there. We're going to jump into these charts and actually see what some of these are doing. So go ahead and start dropping in the chat what you want me to take a look at today. But guys, folks, let's go jump into the news. The U.S. economy is in for roller coaster inflation and could be headed for an ultra rare full employment recession, BlackRock has said. So let's talk about this for a second. And let's get into the nitty gritty of the details here. This is a very rare event, guys, that takes place when we have full employment going on at the same time as recession. And I think that is exactly what we may see. So the U.S. economy is in for a roller coaster inflation. It could be heading for an ultra rare full employment recession, according to BlackRock. BlackRock issued this warning that the U.S. economy may experience chaos due to the risk of roller coaster inflation and an unusual full employment recession. In a recent note, the asset manager highlighted conflicting pressures in the economy. Uh, Consumers are shifting from from goods to services, causing goods deflation, while the tight labor market is driving wage inflation as workers demand higher pay. And we got an article about that I'm going to be talking about today too. A lot of strikes going on in the U.S. Piper, that Bitcoin liquidation is $281 average per person. Wow, that's painful. I imagine some of those were like $10 or $20, and some of those were much higher. So average 281. Interesting. This combination is likely the result Oh, likely to result in a roller coaster trajectory in the coming quarters until inflation eventually settles around 3%. So, they want this there at three. They want it at two, but they're saying three is where we're probably going to land at. And I think that's a very accurate statement coming out of BlackRock here. Don't have to like BlackRock, but at the end of the day, they got some pretty smart people over there working for them. So, um, yeah, the strategists have been warning for months that investors are operating in a new era with elevated inflation and interest rates becoming permanent features of the economy. We are starting to get into the we're starting to get into a mindset that this is just the way it is, but we're still going to invest in what we believe in, and I think that's what we're starting to see here. That's what BlackRock is saying is that the elevated inflation and interest rates, we're starting to understand that this just may be the new norm. So you got to remember, interest rates were this high for a lot of years. Most of the history of everyone that's alive today has been higher interest rates and inflation. So why would we not go and expect that this could stick for a while? And why would we not invest in those markets? Markets still went up when we had high inflation and high interest before. So that is what they're seeing there. So I just wanted to bring that out. If you're a millennial, shout out to you. I got to do a little thing here to get this signed back in. I don't know why it signed out, but I got an article here from Bloomberg because why I picked up Bloomberg so that you guys can get some Bloomberg news from me that you may not normally get. Because they do that whole thing where it's if you don't have an account, you can't read this, and people share those articles, and it's annoying. It's annoying. It's so annoying. But it's okay. I've got Bloomberg here, and they're asking me to do all the captchas, and I got to do 1,000 clicks of something that looks like a crosswalk there. So give me 1 second, and we will get to that. There we go. Verify. Thank you very much. And let's get back over to the article here. Shout out if you are a millennial because older millennials are on track to retire more comfortably than late boomers. So, younger boomers uh, do not have themselves set up as well as older millennial people. This report is from Vanguard. That's true. I did. I picked up Bloomberg because Crux wanted it because he's a very demanding assistant. Millennials often worry they'll never retire. It turns out a lot are better situated than baby boomers. This is according to Vanguard's retirement readiness report that found that older millennials across most incomes are on track to retire with a closer level of income to spending need than both Gen X and baby boomers. So what they're saying here, breaking this down Barney style, is that their needs, their income, their spending cost, the cost of living is more in line with what they have set up in their retirement availability than most people are. So a lot of older, your late boomers, as it said, your younger boomer generation, they might have to pick up that part-time job to make ends meet and keep that flat. So, uh, Gia, you're not a boomer. How old are you, Gia? I know you're not supposed to ask people that, but you are not a boomer. I guarantee you are at the cusp on the upper side of Gen X. So, millennials are facing higher education, housing, and healthcare costs and are less likely to enjoy the same level of Social Security benefits and income from a pension. Shocker. But what did they do to change that? They changed that in ways for investing. They looked at a lot of more riskier things, I believe, and it's probably a lot to do with crypto. So I am going to guess that a lot of your millennials that are better set up in the marketplace for investing are probably looking at charts and stuff like that. They probably know how to do that. Um, yeah, because my kids and grandkids still live with me while I pay for everything. Crypto Billy, so true. So yeah, charts, guys. That's why we do what we do. I think that the millennials are better. They have better knowledge of what's going on in the investment space. They're more plugged in with social media to know what's happening with movers in the markets, and they watched some good channels with some TA. So join us here because knowledge is profit, and millennials absolutely crushing that when it comes to their retirement setup. So. Jamie Dimon as Jay Bravo says, Jamie Dimon here, JP Morgan CEO says two extraordinary storm clouds are threatening the United States. And I love this picture. This is kind of cool. This looks like something that AI would generate right here. So, uh, Eric Wallen, you're horrible. This has the chief executive of banking titan JP Morgan is warning that the United States is facing two exceptional headwinds. Number one on here is going to be the fiscal money being spent is so big, the largest in peacetime ever America. So we're spending more money as a country right now with us not being at war than we ever have before. So very high deficits and quantitative tightening that we've never had. So I know that some people think quantitative tightening will be uneventful. I'm not so sure. At a minimum, I expect volatile markets, which is okay. We'll trade those volatile markets. Is not afraid. And then the long-term fiscal things are kind of inflationary. Oil prices, certain commodity prices, the green economy, because we know, this thing's costing a lot of money. Go ask California. The restructuring of the trade, you name it, I see it is adding to inflation, not subtracting inflation. So I don't think inflation will keep going down. It may not, so therefore rates may go higher. That's the key takeaway there, guys. They believe that rates may go higher. The biggest storm cloud, though, is geopolitical. It's Ukraine, the humanitarian crisis. It's a war not far from here. It's long, 600 miles, and 500,000 people were killed. It's nuclear blackmail. It's going to affect all global relationships in America and China and trade alliances. You put those, so I just put those two things. I keep a close eye on, and then how it affects the economy is different. So those are the things to watch there. But he also warns that the Federal Reserve could hike interest rates as high as 7%. How do you guys feel about 7% interest rates? Let me know down in the chat. You think things are expensive right now? That would put us at a 10% mortgage, just so you're tracking. And that would put our average car price somewhere around the realm of $800 to $1,000 a month. So shout out to the federal government for sticking it to us while the world is also sticking it to everybody's pockets. So healthcare workers, I was talking about this earlier. We're talking about people are demanding higher wages, especially those millennials, right? They want more money for their buck. And I think Crux said it best yesterday when he was talking about it's not that millennials and Gen Zers are lazy, as everyone says. They just demand that they get more money and paid fairly for their work. And when you look at the cost of things, yeah, we made it on a lot cheaper amounts of money when we were younger, but we didn't have the expenses that they have today. Today's prices are just absolutely stupid. So, healthcare giants worker goes on strike, adding to that Hollywood Writers Guild strike that's going on, and the United Auto Workers. So, two big ones that we're talking about right off the bat there. Now, more than 75,000 Kaiser Permanente workers have begun striking as of yesterday morning, with the largest U.S. healthcare walkout in history. So there goes our medical prices. They're going up too, guys. The 3-day action could stall services for almost 13 million people in at least a half a dozen states and is expected to shut down non-essential services. Kaiser operates 39 hospitals nationwide, and they're one of America's largest healthcare providers. Here's today's, I guess that's another one. There it is. Demonstrations across the U.S., most recently in Hollywood and most famously among auto workers. This adds to that. The issue at the heart of this latest strike are pay and staffing, with the union arguing that there are not enough workers to handle patient care. Since the pandemic, the number of healthcare vacancies has soared as burned out workers are quitting. So I kind of get it. I understand what they're saying there. And, I get it. I get it, and they're not wrong. I've watched. You guys know that my dad is going through a lot of medical things, and the truth of the matter is that he is absolutely. I've seen it. He's absolutely in a place. No matter where I go, whether it be the emergency room, whether it be inpatient admitted at the hospital, or whether it be in the nursing homes or with the VA. There is a shortage of workers, and I'm always constantly having to go tell the nurse, hey, he needs this added. Hey, he needs that. So, yeah, I get it, but this is probably going to result in higher prices for our medical too, folks. So, Robert Kennedy over here, little news sent to me from Crux overnight. Crux of Crypto, shout out. Ross Albright's case, if elected president. I'm just going to touch on the headline here. I am very concerned about all the government attacks on Bitcoin. You know what, Ross? I am too. I'm very concerned about it also. He said massive returns are possible within this. Oh, that's not it. He said that he has a clear stance on figures such as Julian Assange and Edward Snowden also. Uh, but more importantly, he says that he wants to take a look at Ross's case here to see if he was justly convicted. For those who don't know who that is, Ross is the founder of Silk Road, and he's looking at was it double life sentence? It's horrible. But yes, he said Robert Kennedy wants to take a look and see. He vows to review his case, and he's concerned about Bitcoin. So Robert Kennedy so far has my vote for next year. Just so you guys are tracking. Brian D, I'm paying 10% interest on a 2023 Kia, and I have a 740 credit rating. Yeah, that's exactly what is going on, Brian. And and my heart goes out to you, man. So, Robert Kennedy, going to review Ross's case. I don't know that Ross should be in there. I think it is a double life sentence. So let me see if it's in here. But I don't think that he should be in there for that long. As he said, code is First Amendment right for freedom of speech. So he's going to take a look at that case. He might turn that over. I mean, there's been other people that I do believe should not have their case turned over that presidents have made that call. So if he's elected, probably a pretty easy one to do. Edward Snowden, that's a half for me. He did sign a non-disclosure agreement, and there are appropriate channels to report intelligence oversight, which is what he was claiming the NSA was doing. So if you know, you know. Let's get over here. Look at this next one here. Quickly getting through the rest of these headlines. Former BlackRock senior executive says 150 to 200 billion dollars will flow into Bitcoin funds after the Bitcoin spot ETF is approved. Now, keep in mind, calm down, everyone. We have talked about this that if and I apologize for the cough. The weather's changing out here in El Paso, and dusty windstorms. So I apologize for that. But we have talked about that a spot ETF for Bitcoin will not mean overnight rocket to the moon. We've talked about that. So uh, this is kind of in contrarian to that, but it doesn't really give a timeline. So let's go take a look and see what he's actually saying here. Stephen Schoenfeld, a former managing director of BlackRock, predicts that the U.S. Securities and Exchange Commissions will approve a Bitcoin spot exchange ETF in the next 3 to 6 months. He made the prediction during a panel discussion on ETFs at the summit in London. He believes that the SEC will approve all ETF applications at once to avoid giving any one company a first mover advantage. That's interesting. And he also noted that the SEC's decision to delay decisions on several pending ETF applications is a positive sign, as the regulator is now seeking comments rather than rejecting the applications outright. So I can go with that. I can go with that. If a Bitcoin spot ETF is approved, there could be an inflow of 150 to 200 billion dollars in Bitcoin investment over 3 years. So there you go. Over 3 years, guys. So this is not saying overnight moon. I can absolutely go with this. Crux of Crypto in the chat here. It's officially been a decade since Ross Albright, the man behind the popular online marketplace Silk Road, was sentenced to life in prison without the possibility of parole. Yeah, man, come on. I know people that have less sentences than that have done way, way, way worse crimes. They're probably sitting there for selling marijuana back in the 80s during the war on drugs. So yeah, so a 3 year period is what he's talking there for 150 to 200 billion dollars going in, which would put us at this point right now somewhere towards the end of the 4 year cycle. So I would expect that some of these final $50 billion in here might actually get locked into the top. We'll see. Visa. Just touch on the headline here. This one doesn't have a big thing in it, but I do want to watch Visa's price action because they're launching a $100 million fund to boost generative AI technologies. Visa, the global payment giant, is doubling down on its commitment to artificial intelligence in the realm of commerce and settlement. So watch for Visa coming out and kicking in some AI on their back end at the consumer level so that it will help speed up prices and stuff. But you really want to speed up, you want to speed up transaction and lower the prices of your 3.5% rate there that you pick up. Try crypto, Visa. I'm just going to say that. Look at X hits the spot here, getting my news on the X here. This one, I love this. I love this comment here. And this is so true. I'm going to blow this up here so you guys can see it a little bit better. This is from Miles Deutscher. I hope I said that right. If I butchered his name, my apologies. But he said, if you had told me at the start of last year that Luna would go to zero, that Three Arrows Capital, crypto's biggest venture capitalist, would subsequently collapse, that BlockFi, Celsius, and Voyager would all go under, that FTX would implode with SBF being exposed as one of the biggest frauds in financial history, and that the SEC would sue Binance and Coinbase and label officially dozens of altcoins as securities, I would have assumed that the industry would be completely wiped out. Yet Bitcoin is still standing strong above $27,000, currently above $28,000 as we speak. And we're going to jump into that chart in just a second. This is a remarkable feat showcasing crypto's resilience amidst extreme adversity. I can't disagree with that at all. I think that is a fantastic statement. Because let's face it, if this had happened to somebody like, I don't know, the AI industry or credit card industries start collapsing and we can't use our credit cards anywhere. Everyone's just going to flip over to cash. No one's going to look at a credit card company the same again. Crypto has showed resilient. So that's pretty cool. This is from the Kobisi letters. Oh, this is not the right one. I wanted this one. Average interest rate on a 30-year mortgage loan. Okay, and I know I read this yesterday, but this is the one that I want to show you. Median monthly payment for a home is now 50% of someone's income. So the median monthly home payment is now 50% of the median household income. I know that sounds nuts. That means half of everything you make is going in to one of those to your house, right? What if I was to tell you it's actually 70% of everything you bring home? Because 30% on average is your tax that doesn't go to you at all. So it's actually on a post-tax basis, 70% of the median household income is what it is now at for the monthly average median monthly home payment. There has never been a worse time to be a first-time home buyer. So I also read an article. Let's jump over here real fast before we jump into the charts. I also read an article that had said that commercial real estate building right now, developers are developing and building more apartments in the United States than ever in history right now. They're building apartments left and right. Why? Because it's much cheaper than a home. They can rent them out. And on top of that, they take this smaller plot of land and build, multiple levels on top of each other so they can mass produce housing for renters because that home mortgage is ridiculous. So if you're looking at homes right now and it's going to be 70% of your annual income, don't do it. Don't do it. So you will own nothing and be happy. Fact, man. That's what the state is. That's what it is. All right, let's jump over here. Taking a look now at Bitcoin. Guys, we had a pump. Yesterday, we were talking about this level down here. Where's yesterday morning? Right there. I said, look, if we can't hold this, we're going to pull back in. Well, we did hold it. This is the golden pocket right here on the charts. And now we've also confirmed more bounces on this trend line here. Yes, we did have a little breakdown here behind it and it became resistance. We did have a fake out above it. But once we got back above it and it held there, that's why I always tell you guys, wait for the retest on the line when it comes up. Yeah, what if it's 70% though? It could be 70%. Multi-generational living is becoming big due to cost, just like Asia. Absolutely, Crypto Billy. Absolutely. I appreciate you guys being here today. If you haven't hit that like button, please go ahead, smash that like button here. Let me do this so I can actually get usage out of this. Do that right there. Hit that thing, hit that subscribe, and we will be bringing you this data every day. If you like it, hit the notification bell. Know when I go live every time. So we did get the bounce there on the golden pocket, and up it came. We got yesterday confirmation. I said if we can't hold this, we would come down. Well, we held it, and now we're looking to the upside, especially on that data that came out this morning, where we had the numbers. And what was it? The job numbers, I believe. I can't even really recall. A lot of stuff I went through today. Jobless claims. The jobless claims came in better than expected, so now we are looking at upside here, fighting to hold that $28,000 range right now. Just dropped below 27,938, so it's trying to stay up there. But let's go over and let's take a look at the daily on here and see how the daily's looking. I'm fortunate to be in a job that has unlimited overtime. Skipping it today, though. Hey, shout out to taking a break. Sometimes you got to take a knee. We are looking here like the RSI primed is hitting up into that high levels again. So we could possibly see a $28,000 rejection, especially tomorrow on the jobs report. We'll have to wait and see on that. Don't be surprised if tomorrow's job numbers send this back down after a rejection at the $28,300 range here. I want to go over and pull up our chart prime oscillator pro here because right now I'm on the MVP and I want to see how we're looking here on the pro suite oscillator. Give it a second to load. 3 oscillators in one here. Yeah, we're still looking at the downtrend that we had here on this red arrow, and that is printed right there. And then we do have a momentum dot, but kind of running along the top of the cloud there. Will not be surprised to see that come down, but this definitely getting a little high for my liking. Might be time to pull back a little bit of to refresh here. But if it does break below this trend line, I'll be watching to see if we get this or if we actually come back down into the platinum pocket there. So that platinum pocket coming in at about 26,200. But yeah, still bearish in the markets, but some bullishness on the charts today, giving some hopium. Crypto antagonist, you are late. You're going to have to go back and watch it all over at the beginning, and there will be a quiz later. So taking a knee. You need a break. Sometimes you got to get off your feet and take a knee. That's what that means. So if you don't know, now you know. Knowledge is profit. Sometimes it's just nice to know things too. Let's go take a look at Ethereum. Despite Bitcoin having a nice rally up, Bitcoin not seeing the same action going, or Ethereum not seeing the same action going on here. Pulled back after a nice breakup above the 382 and is pulling back down below it right now, meaning that Bitcoin to ETH chart is looking pretty ugly right now, I would imagine. And Bitcoin dominance absolutely moving up. Let's go take a look at Bitcoin dominance because of that right there. Yeah, Bitcoin dominance. There you go. Moving. Bitcoin dominance on the move. I don't know if you guys recall a while back, I did tell you guys that I was looking at getting my all of my crypto over into Bitcoin, and so I did that a while back, and then I pulled it all out of Bitcoin at around 30,000, so that I could collect that money and hold it to pick up some cheaper stuff later on. Very risky, I know, but I knew what I was doing. So that's why I hope you guys watch so that you can see and hear when I'm doing my stuff, because I don't give financial advice, but I will tell you what I'm doing, and sometimes I make some pretty decent moves. So, which is why crypto keepers hit me up to trade. All right, let's get back to Ethereum here and take a look though. Let's see where we are with the moving averages here. These moving averages are weekly moving averages. They're exponential weekly moving averages. And I've got the green one on here is going to be my 50. That's my 50 right there. That is my 100. The orange is my 200. The red's my 300. Currently right now, trying to fight on that 200 weekly moving average is what we're doing on Ethereum. Let's go take a look at Bitcoin, see how it's doing on there. Getting above the 100. So that's pretty bullish there on Bitcoin. And then, yeah, did you guys let me know anything in the chat? The Platinum Pocket. Yes, 786 to the 887. That is correct, Crypto Billy. And I love using that Platinum Pocket. So, yeah, I got out right here when we broke below the 236 in this range right in here. So that's where I got out of my price. And I don't think we're going to make it back up to that. I think 28,000 is going to be pretty strong resistance for us. Might be a wick up, but I don't think we'll have a daily close above it. I could be wrong, though. Can be wrong. Sometimes I can be wrong. Let's go check out AVAX. AVAX had a decent little move here. Now it's starting to level out, and we do have the markets open. So we're going to take a look here in 1 second and see how the markets are looking there. Just to point this out for you guys on the AVAX here, we did have a breakout of a falling wedge right here. I had to get that word out. I always want to say falling rising triangles, falling wedges. I don't know. It always trips me out when I try to say it in my head. It doesn't sound right, and then I know it is. It's a falling wedge. Breakout here. We did trade down that trend line a little bit, but the measured target on that is actually at $11.21. So don't be surprised if this does do a little pullback here and get to bounce on this previous zero line that was support. Now that we're above it, retest on that. Looking for that target. I would actually look at getting in at about 966 and riding it up to that. That would be a 16% move right there. So, shout out Chart Prone giving us the alpha without even having to do any work. So, if you guys want to get these indicators and you don't have them yet, you guys can check the link below in the description. You can get 45% off your first monthly or quarterly subscription. Plus, you get free training and free live classes over there with OC Guy in the Discord. So, anyone that's giving out knowledge, you should be listening to. I am a little concerned on AVAX, though, because we do have a very, very high RSI prime here, but we could still run up. We have no overbought at all on the Oscillator Pro. So keep an eye. Keep an eye on this. Keep an eye on this. Keep an eye on this retest. If it holds, that's your target. Let's go take a look at the Dixie. If you have time, can I check Clean Spark? I can, absolutely. Because I'm getting ready to check the Dixie and go into stock. So perfect timing for you. Dixie, even though Bitcoin's going up, Dixie not really pulling back here on the weekly chart. Still looking very bullish, breaking higher high, making new higher highs because we were making lower highs and lower lows. It has flipped that trend and has now just been absolutely burning here since July 17th on a continuous uptick, 0 red weeks for the Dixie. Man, that is just crazy. Let's go check the 10-year yield, and then we'll get into some stocks. Where is my 10-year yield? There we go. 10-2 right there. Oh, I did not mean to do that. That's okay. I wanted this though, and I'm gonna. There we go. We're perfect. Yeah, 10-year yield pulling back about 50% on the weekly candle here, but still nothing horrible. You can see here we've done that back here. We did it back here. Not going to be surprised if this closes the week here, but it's still running up. It's at 4.733. Yesterday hitting 4.8. Sometime this week, I guess it was yesterday though, that it hit that 4.89. So, 4.8 line, I should say. So, yeah, the 10-year yield still looking nasty. Again, as I told you guys yesterday, this doesn't mean that people are buying the 10-year yield. This means people are selling it. They have no faith in the U.S. economy in the next 10 years. So, because they are selling this off, they believe that this rate is going to go higher. So they're selling off now so that they can buy when it's higher. And there are a lot of people claiming that this is going to hit 5 to 6% plus. So, ugly, ugly, ugly. All right, let's go check Clean Spark out and let's check a couple of stock markets. Check the US 30 down today. Whoa, that's on a 1 month. I don't want the 1 month. Down for the month, of course. Let's go to 4 hour. There we go. Thank you much. Thank you much. Appreciate that. I want to go here and we're going to put this on that. US 30, there we go. 4 hour charts. There we go. A little bit down today on the opening here for the ES. That's okay. That's okay. We knew this was coming. We had a breakdown here. Back here on September 21st, we had a breakdown. Gave us a nice measured target. We came down, and then we even broke that. Came down more. Beautiful retest on the bottom trend line there. You could have entered here on the retest. You could have entered here on the retest. You could have entered here when it dropped below your EMAs. You could have entered here when it broke that EMA of the 100. You had multiple opportunities to go, hey, the market is going down here on the futures for the Dow Jones. So let me get in. So, yeah, let's get into the ES1. This is going to be our S&P 500 minis. This one, fake out. fake out. This would have been a fake out. That's why we wait for the retest. You see here, we had a breakout. It never came back for the retest. This would have been the first retest here, and then we would have closed out in the stop right below that, and it would have been okay. That's why we use risk management and wait for those retests. Now, when we came down here, we had the retest. So you would set your stop loss right back inside past the previous wicks, just like you would do here, which would have hit this. And then you would have caught this all the way down on the short, even though it gave you this false breakout. So, um, look here, guys. On the S&P, we are getting a flip on the ribbon here, coming down to zero line, starting to get a red on the Heikin-Ashi candle of the RSI primed. I like to use the Heikin-Ashi on here. They really give me an idea of the trend. So what I'm seeing here is likely S&P futures could be coming down, depending on what we see tomorrow morning. What those job numbers look like tomorrow will tell us a lot, and the payrolls. So, looking at the NASDAQ 100 here, NAS 100. Yep, more downside again, fake out there, but retest, and we're good to go. We do have divergences that printed here that gave us the upside. We've already played that out, and now we're looking at more downside here on the daily opening of the NASDAQ. So probably going to close down in the red today for stocks. And I imagine that throughout the day, Bitcoin will have a pullback probably into the golden pocket. Again, on that, we are looking at Bitcoin's pullback zone to be about 27,500. Rejection coming off of that 28.3 area, currently sitting in a breaker block. Now let's go check out CleanSpark, and then let's drop out and have a little chat. Check the chat. That's what we're going to do. CleanSpark, where are you? Let's go to CleanSpark. Not a crypto. There we go. CleanSpark is going to be in here somewhere. It's right there. Looking at CleanSpark. Okay, so we're in a falling wedge, which is a bullish pattern, and we did get a bounce again off of this bottom range, but we do have a breaker block coming in right here actually, this is the breaker block, this former gray area. Now we have a new order block, and that order block has very high liquidity. So I can imagine that this may pump up into this trend line, hit that order block, and then bounce back down even lower. I don't know what the bottom is going to be on this, Eric. However, I will say that Bitcoin is going to have to make a drastic turnaround in order to turn around CleanSpark. And the market sentiment right now is not good. So let's look at, there was something I was going to show you here. We were talking about Bitcoin and CleanSpark and the downside that it has. Oh, I know what it was. I was going to pull up my halving chart, and we'll take a look at the hash rate ribbon. Nope, not in there. It's actually on the Gaussian channel. There we go. Yeah, we're still looking here, but if we pull this up and look, you can see that we're flattening a little bit on the hash rates right here. We do that every now and then, and we will have pullbacks every now and then, but I'm pretty sure if you look at this and coincide this onto, put this chart next to what you're seeing for CleanSpark, I bet you there's a correlation and drops in CleanSpark price in comparison to what happens here with the hash rate slowing down. So right now, hash rate flattening out and not really doing a whole lot. So watch it. Watch it. All right, that's what I got for you today, folks. I appreciate you guys joining me here. And yeah, share this video. Put it out there. Help me grow this channel. I appreciate all of my original people from Investing Bros that are over here, people from the Chart Prime community that are over here, giving me at least someone to talk to. But let's grow it. Let's grow this out, and you folks can be the mentors for the new people that come in. So go ahead and share this out there. Share it on Twitter. Push it out to your friends and family. Tell them, hey, if you want to know about crypto and you want to know about the markets, this guy does a pretty good breakdown of explaining it. So I think I do. If I don't, let me know and don't share it at all. But if I do, share it. Let's grow it and let's make it good. I appreciate you guys being here. Again, if you guys want to get to my indicators, check the link below. You guys can pick those up 45% off. If you already have them, good on you. You guys are probably locked into great prices. And we will watch tomorrow morning to see how this is looking with the job numbers and the payroll that's going to be coming out. Watch for volatility when those numbers hit tomorrow morning. I'll see you guys then. Until then, as always, trade safe, stay primed, and remember, knowledge is profit.
That was awesome, dude!